Catching up with Gary Wagner now before non-farm payrolls. Gary, good to be back with you this week.
Great to be here. Great to be here.
All right, Gary, let's talk gold, which is hovering around the 4-year lows this week. I had Don Cox on earlier this week who was saying, look, just give gold a break. It's okay that it's pausing right now. What are your thoughts on this?
Well, you know, when you take a look at the activity that we saw on yesterday on Thursday, where we had the Dow at a record high, we had oil continuing lower. We also had the dollar very strong, but yet we saw some supportive action in gold. So I think at least for the time being, gold traders as well as investors are just trying to take a break and see where the precious yellow metal belongs in terms of pricing.
So, Gary, are you looking at some new support and resistance levels now?
Well, you know, in terms of support and resistance, we've been coming down so fast. The former support levels are going to have to turn into resistance. In terms of support, I've got the intraday low at 37, so we can see if that holds, and then 1131 is another support level, and of course a major support level at 1100. In terms of resistance on the upside, you're probably looking at 1161, although we haven't seen any real pops back up to look at places where we could find resistance as of yet.
Now, we've all heard that gold acts best as a hedge, and some investors are struggling to understand what the role of gold should be right here. Gary, how does one protect themselves?
Well, in terms of protecting yourselves from your gold investments is one thing. In terms of using gold as a hedge is another thing. At any price that gold is sitting at, I still believe that astute investors should have 5, 10, maybe 15% physical gold in their portfolio as a protective measure. Now, we do have an incredibly strong stock market, U.S. equities markets. I expect that to continue moving to higher ground. I also see the dollar maintaining this strength. But when you look at the big picture over the long term, it's always prudent to have a percentage of your portfolio in something like a hard asset like gold.
Fantastic, Gary. On that note, what have you brought us today?
Well, we're going to be taking a look at this insert. Obviously, we've had the dramatic drop that myself as well as other people have been looking for. So the question is, how low can gold go? And what are our expectations through November going into December?
All right, let's get to your insert.
Another brutal week in terms of gold prices, plummeting again down substantially, dropping roughly $30 this week. We're looking at a weekly chart, COMEX Gold. And when you consider that 3 weeks ago, this market was trading roughly at $12.60 per ounce, and now we're over $100 below that. This being 100 here at 1160 at about 1140. This market has absolutely dropped considerably. Now, the writing has been on the wall for a while. And chart this, viewers know that what we've been looking at really has been this dollar, which has just been a runaway freight train. When you consider that back in July it was trading around 79, it's almost 10 points higher, trading at 88, almost 89 at this point, 88.25. You can see the dramatic kind of rise that we have seen within this market in the dollar and a dramatic decline in gold. And so what is the net result when you've got quantitative easing going on in the European Union and Bank of Japan, and having us have ended quantitative easing? Not only do you get tremendous strength in the dollar, but you get a runaway equities markets. This is the equities markets. This is the E-mini Standard & Poor's 500 at 2029, record top, and it's still moving higher as we go into after hours trading. So with that in mind, where could we see gold as we go in through November, Thanksgiving, and of course into the end of the year? Looking at a 2-day chart, absolutely no doubt we have had the dramatic break that we talked about, breaking through this triple bottom. And based upon that, if we see history repeat itself, meaning last time it broke a triple bottom, we could see the market move substantially lower. And if it does move lower, the basic prediction that I have is roughly at about $1,000. And let me show you how I've come up with that. We're looking at a weekly chart. And on this weekly chart, there's a couple of things. Of course, one, if you recall the compression triangle that we talked about, we have absolutely hit the apex of the compression triangle, and now we've broken fairly hard to the downside. Now, the next real level we had to look at was 1168, 1157, and this is based upon a harmonics of a 50% retracement of this long retracement, and then a 61% retracement at 1157, and that retracement really starts right here at roughly 700 up to the record top. And it is the what I call the harmonics, or points in which we have different time cycles coming to the same conclusion, that I really hold more weight to the probability of this being a strong potential area for support. 61% retracement, 990, 76% retracement of the shorter retracement, 977. That's a harmonics roughly in the same place. I'm not saying the market's going to go straight down. I'm not saying that at some point we might not find support at some other areas. We do have a support level at around 1100 that could, in fact, and I believe should hold. But in terms of what I'll call a worst case scenario in terms of where we could see this market drop to, it's got to be a logical point to look at this 61/76% retracement based upon these Fibonacci studies. Stay tuned. This looks like we're going to have some fireworks as we go into the end of the year. Again, my interim term forecast for gold prices.
As always, thanks so much, Gary. We'll see you next week.
My pleasure. I want to wish all of our viewers a great weekend and prosperous investing next weekend. And please look for our daily commentary, Hawaii 6.0, that is coming out Monday through Thursday. It's posted by 6 p.m. Eastern Standard Time. And as you know, in Chart This, I spend a lot of time looking at the technical aspects of the gold market. In our commentary on Hawaii 6.0, I kind of flip the switch and look at primarily fundamentals involved.
Have a wonderful weekend, everyone. We'll see you back on Monday.